The latest attempt to raise standards in the financial planning industry has led to open revolt in some sections of the accountancy profession. Thousands of accountants also double as financial planners, and many are up in arms over the Accounting Professional Ethical and Standards Board's attempt to rub out conflicted remuneration in a way that goes much further than the government's Future of Financial Advice reforms. Andrew Robertson reports.
The collapse of Storm Financial was the poster child for everything wrong with the financial planning industry. It prompted the Future of Financial Advice reforms, which have banned many of the commission-based payments at the heart of the Storm fiasco. Now the Accounting Professional and Ethical Standards Board wants to raise the bar even higher for financial planners who are also accountants.
We've always recognised that where financial planning originally started wasn't with the accounting fraternity, and maybe some of the practices aren't consistent with the standards set by accountants.
Suzanne Haddan was on the task force which drafted the new accounting standard for financial planners. It will outlaw charging fees which are a percentage of a client's assets or money, ban third-party payments such as insurance commissions, and also ban nearly all soft dollar benefits. It hasn't gone down well with accountant financial planners.
So our principal concern is that the proposed APES230 or APES230 just simply goes further than the law and imposes significant burden and restrictions on members.
Andrew Conway says his 22,000 members want nothing to do with the new financial planning standard.
We've flagged to the APSB that if it was to proceed in its current form, that our board would move to strike it out and to remove the binding nature on our members and impose an ethical standard and professional standard that aligns with FOFA.
Paul Harding-Davis heads up accountancy-based financial planning firm Premium Wealth Management, which looks after $2 billion of client funds. He believes the Accounting Professional and Ethical Standards Board has taken the wrong approach to asset-based fees. He also worries that banning all insurance commissions will stop many people getting the cover they need.
Even if the premiums are a bit cheaper, would he write out a second cheque to then pay for the amount of work involved in putting in place cover, which could easily range from 3 hours to 20 hours if it's a business type arrangement.
The Institute of Chartered Accountants and CPA Australia are also having trouble convincing many of their members of the merits of APES 230. As an indication of the sensitivity of the issue, both the Institute and the head of the Accounting Professional and Ethical Standards Board agreed to take part in this report, but later withdrew. CPA Australia has yet to return our call. Many accountant financial planners are concerned about the revenue implications for their practices. BFG Financial Services already operates under the proposed new standards.
It's a great feeling. It's professionally freeing because you know there's only one person you represent. That's the client.
The Accounting Professional and Ethical Standards Board remains hopeful the new financial planning standard for accountants will coincide with the start of the FOFA reforms on the 1st of July next year.